Hello and welcome to the Closing Beat, everybody. Happy Tuesday to you. How's it going out there? You ready for a drink yet? I found this on the desk here, this Hotel Tango bourbon. Somebody, actually that's from last week. That's from the Wine and Wealth class. Nobody's drinking today here at the office. We love a good pullback, right? We're going to talk about that. We're going to get a little bit real here today. So I'll need you to pay attention. We're going to teach you something as well. Do we have a leaderboard? We do have a leaderboard here. Let's take a look and see how it's going. I imagine big changes.
Yeah. So we got Frankie Eloy.
Frankie Valli?
Oh, no. I forget how to say Eloy's name, and I just want to keep saying Eloy, and I know it's not Eloy. Alan, Peripherio, and Ryan. Those are your top 5 for today. Yeah, you can play at jazzwealth.com/guess the Dow for your chance at a free $100.
Nice, and no one can see you today, so they don't get to see.
Oh,
you look. It's because he dyed his hair purple. It's one of those hippies.
Yeah, I was ready to do the full reveal here on the show.
Yeah, that's what we used to say. We used to call him a hippie.
Who, me?
No, like people that would do that. You know.
Oh, yeah. It's hippie behavior. You don't have to call them a hippie, but it's hippie behavior.
Yeah, that's what it is. Anyways, so we're going to talk about this here today. Of course, everything that's going on. We're financial advisors here at Jazz Wealth. We're always paying attention. We love the markets here. We're obviously very interested in that. We only grow as a company if your account grows. So taking advantage of these pullbacks, making the most of it is, of course, one of our focuses. And while other advisors are playing checkers, we are playing chess over here. Taxes. You got to focus on tax. Remember Milton Friedman back in the day? Those of you that are old enough to remember, he talked about, if you really want to know, watch the government spending. Government spending goes up, your taxes go up, whether it's through inflation or, his exact words, whether it's through inflation or through an actual like traditional tax. We're going to talk about that government spending a little bit because doesn't interest rates going up affect their debt, which is our debt as well? Maybe something to look at there. Anyways, let's take a look at the stock market here today because we got a nice little pullback. We're now finding ourselves back to almost a technical level. And I bring up technical because we're going to talk about that with utilities in a second. The technical investors, traders, and all that, they use these levels. So whether you like it or not, it's something that you want to at least know about where people are going to be more interested in picking on the markets. So basically, we're there right around the 200-day moving average. It's also what's called minor support in this case, just some previous highs there, consolidation of previous highs. And so it's really, really fun when you can see what happens ahead of time. Like almost you could just tell, you can feel it. You can get sort of the mood of the market, right? Can't do that with my wife, but with the markets, I'm just like so in tune, man. I just like know what's going on. Well, yesterday we talked about this. We talked about the S&P really only holding up, right? That would be the dog over there. That's okay, let him play. The S&P really only holding up because of these stocks. So it's kind of unfair, right, that it does that. But every other stock was showing you, hey, we're weak. There's no strength in the broad stock market. It was only in those stocks. Fast forward to today. Oh, no. What happens when those 7 stocks have a bad day, right? It just demolishes the market. We knew the rest of the area, the market was weak, right? Just compare colors to colors, right? With the exception of like utilities down there. Everything else was showing you already. We're weak. These guys were saying, no, we got you. Don't worry. They got to take a break at some point as well. We, as a company, we are in the credibility phase of our business, right? I come here every day to teach you something, to kind of show that we're here and all that stuff, so that when you're thinking, I may need an advisor, you go, well, those guys are on it, right? They're always around. I'm not saying I'm always right, but the goal is credibility. So when I can point out things to you ahead of time, instead of coming back like everybody else and going, well, I knew it was weak, man. I knew it was weak. No, I love to see that. The top 7 from yesterday did not participate today, and that was broadly the reason why you have such a big pullback here today. Interest rates are, of course, what they're going to talk about. But now, if we look at the S&P, you say, well, Dustin, didn't you say that a lot of stocks were already oversold? Like they're like due for a bounce, maybe not today or yesterday or whatever, but they're due for a bounce, right? Yeah, we can actually measure that as well. It's kind of funny. We're right back to extremes here. So just a couple months ago, we were pointing out the number of stocks that were overbought, saying that's not normal, right? This is basically just a breakdown of the S&P, and we're doing, instead of showing all the stocks and making it look all scary, we said, well, just show me the percentage of stocks that are technically overbought. And then just show me the stocks that are technically oversold. Put the rest of them in the middle of nothing, right? They're not doing anything. All right. Well, so we looked at this and said, well, that's not normal. When the stock market has the majority of stocks overbought, it tends to go down, right? We showed each one of these pullbacks to go, what happened after each one of them? Well, where are we at now? We flipped the script just like that. It's been, 2 months? The market has gone down. Now only 3% of stocks are overbought. So you never want to buy when the majority of stocks in the market are overbought, even if it is the top 7 stocks. Well, now the other way, and it's contrarian, so that's why we paint it green. So 67% of all stocks in the stock market, just a touch more than we saw oversold before, 67% of those are now oversold in the short term. What tends to happen after that? People see that. Whether you look at it this way or you look through individual stocks or sectors or however you like to do it, when you look at that, you go, seems like a discount. Maybe you're off by a couple days. That's fine. Nobody tries to pick the bottom, but you say, I realize that a lot of stocks are oversold. So you go back to the stock market and you say, well, okay, as long as those 7 stocks aren't lifting us and holding that market up like yesterday and they sell off too, now I've got something, right? I've got something I can work with in terms of, do I want to invest large sums of money relative to the size of your account? Really, really cool to see how we're now the other way. Right? We're just jamming along here. We got overbought stocks. The market likes to breathe, right? Breathes in, everything gets a little overdone, then it breathes out. It's not chaos. It's not the end of the world. You can easily go to, we're ousting McCarthy. Oh my God, he's going to be now. I mean, that's all political stuff, right? Oh, the government debt. I'm going to really bum you out here in just a second. But you can look at that stuff and think, well, that causes little waves along the way, but it's certainly not like the end of the world. Let's bounce around here. Bitcoin giving back what it had yesterday. The Dow, it's negative. It's down for the year. There's no two ways about that one. It is down for the year, as is the Russell 2000, but that's not probably new news to you. If you look at gold, that has continued to pull back. Those of you that are gold bugs out there, you watch the TV things and you see the commercials and stuff and you're like, I got to invest in gold. Okay, well, I'm not saying right now, but you go, okay, let me get it while it's cheap. Because if I miss the rally, then I'm paying top dollar. This is all these people. Remember, inflation, it's just going to be crazy forever and forever and forever. I better buy gold as a store of value and a protection. That's so bothersome that I'm getting old, right? Because that really bothers me. Look what happened. You got to suffer through all of this now. It doesn't pay you a dividend, right? So gold pulling back actually to me is a good thing if it's something that you want to have a part of your portfolio. Oil started to pull back, found a little bit of support today. It's sloppy, but it's still inside of this range. It likes above that $88 number for the moment. Yes, it sold off. There's an increasingly amount of more short sellers, which are really just the producers locking in their higher prices right now. It's not actual new shorts, but it still has the same impact. So we've covered that one there. And yeah, that's pretty much it as far as that goes. The VIX is obviously higher. I do want to point out utilities. We talked about this yesterday. I saved you like $3,000, $4,000, $5,000, all these technical classes that people sell. I gave you the whole strategy. We talked about it. It's got to have the volume, the wider bar, be extended. What happens the next day? Yeah, there you go. You got a little bounce. And I believe that was the only sector that was higher on the day. So very cool to see something ahead of time, learn about it, and then go, well, let's see what happens. Exactly what's supposed to happen, right? So really, really cool, I think, to kind of point that out. Elsewhere, you had a lot of sectors lose over 1% here today. Really, really kind of a tough area. More bad news, bonds. So the 30-year, which is what I'm showing on the charts here, there's a 30-year, just a beeline for nothing, man. Just falling apart, getting really extended. Now, you like that. If you ever are in something or want to invest in something, you want it to fall as fast as possible if you're going to buy the drop, right? Because it can't sustain that. Utilities are a great example. Those types of declines do not sustain themselves because they find themselves, or investors find value. They find a moment where they say, I loved it at this price. I have to buy it at this price. And that's basically where bonds are getting to. But the 30-year joins some of the other points on the yield curve there, which are pretty much above or almost above pre-financial crisis highs in terms of the rate, right? So it feels like Groundhog Day every day. We're like, new high, new high, new high, new high, as the price of course, bonds moves a little bit lower there. Every day, rates higher, stocks lower. right? The price of bonds is correlated to the stock market, right? So historically, it's correlated to the market. As the market goes, the price of bonds goes. As the market goes up, the price of bonds goes up. That just means that the interest rate or the return that you're going to get goes down. That's a little bit confusing there. Mortgage rates. Rapidly about to hit 8%. What was today's average? 7.83%. The national average today. I think the refi rates, I don't know, don't hold me to this, but I think the refi rates were just over 8% as far as the national average goes. So I hope you like the number 8. It's a bad number in some countries there. But remember, interest rates moving higher takes time to flow through the economy. We went over this yesterday. I won't do it again there, but it takes time to suck the life out of the economy as we have to spend more of our discretionary dollars on things that we need, not things that we want. That takes time, right? I'm starting to see it, and I'm not picking on anybody, but about all my emails this morning were falling on hard times, running short on money, need to make a withdrawal. I don't care if there's a penalty. I need to take some money out. I've got issues, problems, things I need to pay for. Those number of emails that track that stuff is increasing. It's happening, right? Money is coming out of the market. If demand starts to slow down a little bit in these discretionary items, well, of course, that hurts the very companies that are trying to sell you stuff, and they're not worth as much as they should be. Now, here's a fun one. We should talk about the higher interest rates moving to government debt. This used to be a thing a while ago. People talked about this, and now we're so focused on, the Democrats over there fighting, and then Republicans, and then Trump, and the Biden, and Bidenomics, and all that stuff, right? Everybody's fighting about that. But we now have interest rate pressure moving into government debt. But they have an interest rate. They have to pay that. They have to offer that to the public, which in turn is a cost to them, which in turn is a cost to us, right? So kind of flow through economics there. All right. Here is what we have. And this is a CBO estimate and a Goldman Sachs estimate, because I'm not smart enough to put this together, at least plotted on a chart like this. So we're looking at the interest costs as a percent of total spending, right? So in other words, what the government spends, what percentage of that is basically just interest costs. Well, it's doing okay now. We're below double digits. However, if interest rates remain high going into the middle to end of 2024, here's the projection by CBO and Goldman Sachs. We now have double-digit costs approaching 20% of government spending being interest. Okay, that's not a good thing. What does that tell you? We all need to go tell them to fight about spending, right? Don't quit fighting about all the other stuff, man. We got a real problem starting to shape up here. Also, at what point does government spending, the interest on government debt, at what point does that surpass the generated income from our economy? That's important, right? Our economy grows very little these days, but let's say it's growing. It's fine that we have some debt in there, and if interest, has to be a part of that, of course, that's part of the deal. That's fine. But if it outweighs the interest, just the interest, outweighs what our economy can bring in, you got yourself a problem. And the numbers are already pretty high. So I'm going to bum you out just here real quick. Here is basically when the interest payments will surpass 100% of GDP, what the economy brings in. And so we get there at about 2030, where the interest on debt merges with itself over 100%. In fact, it'd be 123%. So if this forecast is even just a little bit off, and we only get to 100%, we now have interest payments that are greater than what we bring in. Just the interest, not the debt. That's a real bummer there, right? That's only 7 years away. You got to start thinking about that. Like when we go to vote and we do all this stuff, put all the, what are you guys mad about? What's the thing right now? What's everybody mad about? Like abortion still? Are we doing that?
I don't know if that's the one right now.
I don't follow. Aside from stuff, what people will tell me, but what are we mad about?
Trump.
Well, who?
Trump.
Well, okay, so there's him. That's the obvious one. But like in the war, like things that bother you, is it like usually it's abortion or equal rights for women or whatever? Is there something?
Yeah,
all of
everything.
That?
Yeah, it seems like it's all of it right now.
Okay, well, so now we need to just add to that. Like have your beliefs, of course, but now we need to add to that. Hey guys. Can't help but notice y'all are fighting about nonsense over here and you're still spending a lot of money. That's going to affect me. which means I need to maybe look for the guy that can at least say that he's going to do something about it, but I don't know what's going to happen there. Okay, let's bring you back up to, let's make you feel good, right? Let's make it feel good, at least a little bit here. Go over here. Year to date, you want a little fun one? I am not making these as recommendations. I'm going to do both sides so that you know I am not making recommendations because I get in big trouble for that. Here are the top 25 contributors to the S&P's returns. If you like momentum and stocks that are just going on and, having a great time and you expect that to continue, here's the top 25 contributors. What I find fascinating, NVIDIA is the biggest contributor so far this year. It has a 1.1% weighting in the S&P, and it's up a lot, right? It's 200%. So its contributions to the S&P's gains, or what are still gains this year, are about 2.25%. Can you see here? Apple, Microsoft, Alphabet, Meta, Amazon, and Tesla. Okay, they all have added more than 1%. The distant group below, Eli Lilly, 48% gain there, has added less than 0.5% gain. These are, as of yesterday, your top contributors, meaning they're the strongest in terms of their weighting, and they've pulled this kind of market up so far year to date. On the downside, do you like discounts? All right, this one might scare you. So on the downside, there's not a lot of really bad stuff in terms of contributions to the weakness. There are some stocks that have had really rough, goes of it here this year, but not a lot in terms of, I'm a 2% weighting in the S&P and I'm down 30%. You can imagine the drag that would have. You got Pfizer here. That is the biggest drag on the S&P at the moment, down about 33%. You got Nextera Energy. Well, they were going to expand. There was all this expansion things. Renewable energy, we're going to do it. Well, what's the cost to expand? It's 100% more than it was, not just in debt, but also in supplies and everything. So they're getting pummeled right now in that space. Anyways, Johnson & Johnson, look through the financials. You got a couple left over there. Healthcare and some of the like retailers, whether it's discretionary or staples, you look around there, you could see the same thing. Some of the solar tech companies in there as well. These are the biggest detractors from positive gains in the market today. All right? So you can pause it or do whatever you want to do there. I just thought I'll put a little list together and we will take a look and see what people think. Okay, just a couple more things and I'll take your questions. I do got to get out here a little bit earlier today. It is Baby Jazz's birthday, so we're celebrating tonight with, I said, what do you want to eat? You want to go out to a fancy dinner or something? She said, just find me a place that's got baguettes. So we're going to get baguettes, right? Some of you with the kids, what do you want for your birthday? You got $1,000. A new car. She's like, a baguette. You know what a baguette is, Cody?
I don't know. That sounds fancy.
It's a piece of bread.
Oh, okay.
It's a nice piece. It's like a long piece of bread.
Texas Roadhouse has some good bread. That's where you should go.
I don't think they have baguettes.
Oh.
I think baguette is French. So there's a place in a small town, Dunedin up there. They got baguettes.
Okay.
Yeah. We'll see what happens there. Okay, just a couple things stock-wise. Got to read the headlines here, people. Or you got to read the summary, not just the headlines. You got Delta Airlines falling apart. So Delta Airlines says, well, we found some of these fake parts on our engines there. That's the headline. Everybody loves using the word fake parts. If you're a pilot or an aircraft owner, the first thing you go is, how many engines did this affect? It's less than 1% of all the engines. They have that 2,000, 3,000 engines out there. Think of the planes and all, they got 2 engines, 3 engines, whatever. So not really a big deal for Delta. I just thought it was kind of funny. So they don't make these parts. It's not like Delta did this. So they use a distributor. The distributor's name is AOG. For those of you pilots out there, isn't that kind of ironic that it's AOG is the name of the company that gave them these fake parts? And it's not fake parts. They're just non-FAA approved parts. I've been there. I've been tempted to be there. I haven't done that, but just keep that straight. You got Meta in the news here. Would you pay $14 a month for an ad-free Instagram, Cody?
Nope.
Right to the point. That's what they want to do. They are considering an ad-free version of Instagram for $14 a month.
I don't mind the ads.
Yeah, it turns out I'm fine with the ads. They do a great job of targeting me. Sometimes I see things I want.
They know too much about me, and they are great ads.
Yeah, so I'm not complaining. I'm happy with the ads. It's fine. Nonetheless, that was in the news for them. Are you kidding me? Okay, Visa. If you are now you have to be a generative AI company or startup or something. They've got $100 million for you here. Remember, generative AI is generating some kind of content that it couldn't have already done before, but learning based on what it already knows. That's not just fun AI that we have, we play the games with. No. Anyways, they started a new fund that normally wouldn't be in the news, but kind of a slow news day stock-wise otherwise. Which brings me to my favorite ticker symbol ever, Krispy Kreme. Have you ever heard of Insomnia cookies, Cody?
I have heard of Insomnia cookies.
Would you like to buy them?
For how much?
I'm a guess maybe 350 million. It's just a majority stake. It's not the whole company.
Oh, okay. Yeah, maybe not today.
Not today. So Krispy Kreme owns their parent company, JAD. They're not based in the United States. They own Krispy Kreme, which owns a majority stake in Insomnia, and they want to sell off a piece of it. They just want to focus on the donuts and do their thing there. I figure 350 million will do it. Someone will probably outbid me, but it's good cookies. Not complaining. All right, tomorrow you got Costco will come out with their sales numbers. That's always an interesting thing there. I will take your questions here if I can, and then if you don't mind, basically on time today. Do got to sneak out a little early. Baby Jazz, happy birthday. Thank you. Somebody spelled government. Oh, you spelled government wrong. Yeah, it wasn't AI, I'll tell you that. That's how you know this is a homegrown show right here. Oh, man. Baguettes at the Fresh Market. Oh, really? I just found one of those this morning. I was taking the dog to daycare. I'm like, there's a Fresh Market right there. Never been, but I don't know. Aircraft on the ground. JW nailed it there. Kind of a funny coincidence, considering some of those airplanes are on the ground. Crazy to see Delta fall apart stock-wise. Supposed to be their best quarter ever, said by the CEO. Yeah, and they're paying off debt. They got a real good kind of a forward focus, but in the short term, higher oil prices, we got a slowing sort of travel demand out there ever so slightly. You can look that up, by the way, to see TSA throughput and see are people traveling, are they not traveling? But yeah, I kind of would agree with you there. Will the House disarray with McCarthy have any effect on the market tomorrow? I doubt it will have anything to do with the market. It's a fascinating transition, or what they're trying to do. It's really fascinating because if you think about it, they need all the Democrats to agree. Don't you think they're going to want something for that? You know what I mean? Like if they can get them all together and say, yeah, it turns out we'll do this, but we want a say in who the next person is. We want something in return. If I'm a Democrat in Congress, there's no way I'm just going to give you my vote, like given how history is played out with these guys. So I think it's kind of fascinating because the new person, number one, the new person's kind of taking over going, hey, you see what happens if you mess around, right? And then the Democrats are like, oh, we'll all vote for it, but we're going to need something in return. You just know that's going on. I don't know what'll happen. I honestly don't really care, but I just think it's a fascinating social study, What happens to the market if we don't sort out our government spending by 2030? Great reset. Honestly, I don't know. This would be the highest amount of interest paid on the highest amount of debt. This is not something I can go back and say, here's what happened last time. Thank God there wasn't a last time. Hopefully there's never a time, but I don't know. I was just man enough to admit that. Yeah. Short-term treasuries for a $10,000 cash park. You could compare it to, so I don't know if you're into this kind of thing, but you could compare it to CDs and money market funds and maybe not have to deal with the volatility of the pricing on a treasury. That's up to you. I'd have to know more on that one. But some people say, even though I'm buying treasuries, I don't want that volatility. It's a thought. I don't know. Just throwing ideas out there. All right, cool. I'm going to wrap it up a little bit early here and get on my way. I appreciate you guys watching us today. I hope you learned something. Our goal, build credibility and education, right? If we could teach you more, you're just a little bit more informed than seeing the headlines on a TV. All right, enjoy it. Thanks for watching. We'll see you tomorrow.